Welcome to Ty's Daily Market Update. I'm Ty Wong reporting from New York, and it is Thursday, August 6th. Okay, Wall Street Journal. This is an exclusive, came out late last night. Nick Timiraos is one of the authors. So it says, President Trump has spoken repeatedly with Kevin Warsh since he became chairman of the Federal Reserve, according to people familiar with the matter. So hopefully Warsh has told a few people, presumably you talk to the president, you should probably let people know so you don't know exactly who your leaker is, or maybe you do, and you want to do that. So maintaining a line of communication between a president and a central bank chief that departs from recent precedent. So there's a long history of the Fed and the U.S. and the president. Famously, Nixon really forced his central bank chief to cut interest rates in 1972, Arthur Burns, for which Burns will forever be infamously known. And that caused the inflation, some believe, that we saw in the late 70s and the early 80s. Now, apparently the president calls Warsh in bursts, people said, several times in a stretch of days, then quiet for longer periods. That's so much Trump, right? You can see, what does Kevin think about this? Let's call Kevin. Best way to do, let's call Kevin. Probably does it on speakerphone. He sought Warsh's counsel on a range of matters, including how the war in Iran and the rapid rise of artificial intelligence are affecting the economy, according to these people. Now, a person familiar with the conversation said that he hasn't breached the topic of interest rates since Warsh was confirmed by the Senate. This isn't, again, not a shock. Trump regularly bypasses formal communication channels, keeping with a wide circle of contacts, including world leaders, business executives, lawmakers, and reporters through his personal cell phone. And I think he does some of his own posting. You know that other people have access to that account, but they don't touch anything that he posts. I think that's probably a rule. So, he said before that he wanted a Fed chair to consult with him on interest rates. I'm a smart voice, should be listened to. Very Trump again. But since then, he said, Warsh should be independent. Now, Warsh's cultivation of any relationship with Trump could be seen as corrective, engaging Trump directly to head off the sense that the Fed is his adversary. Now, my point here is there is nothing wrong with this, because Warsh is the head of the Fed. He should know, just as much, maybe more than even the Secretary of the Treasury, what's going on in the country, along with all the regional Fed presidents and that reports that he has access to. There's nothing wrong with it. In fact, I'd rather him call Warsh and Besant than probably anybody else. Now, this is a very similar article, and the previous one was the Wall Street exclusive, came out at 9 p.m. last night. This one came out this morning, and Bloomberg, basically got scooped, and Bloomberg really, ran and tried to, call all their people and get the information. It's a little extra information, but what I wanted to say is there's a lot of media bias, and if you're not familiar with the U.S., you may not know where the bias is. Michael Bloomberg himself is very anti-Trump, in part because he's a big climate activist and Trump doesn't really care about that. He also has the head of the editorial page is a noted Trump opponent. He hates Trump, was sued by Trump, won. But the difference in tone between the Journal and the Bloomberg article, which more or less says very similar things, is striking. First, he goes, Trump made calls to Warsh in latest sign of bid to influence the Fed. So now the people who write the headline and the people who write the articles are usually not the same. The reporters write the articles, the editors write the headline. I know that because I talk to a lot of reporters. So this is immediately, the tone is striking. He's trying to influence the Fed. Well, he says that he's called them a lot for advice. That may or may not be influence, right? It's how you spin it. In the red here, everything red is the difference in tone, the latest sign of Trump's effort to exert greater influence over the central bank. Now, they did say that Trump called and asked for forecasts and opinions and not pushing him to take any specific course of action. They do admit that, which is good journalism. And Warsh did say, I don't want to be in the business of sharing discussions that the president and I have, which is certainly true. And he goes, and I don't feel uncomfortable receiving a call from the chairman of this committee or the president of the United States. Also true. Now, Powell, and in part remember Trump picked Powell over Warsh previously. Powell was a lawyer. He wanted everything to be up and up, issued press releases, what we talk about. And I think the president doesn't like that. He wants to have conversations, confident conversations that, between you and me, I don't want to read about it, hear about it. If I want to leak it, I'll leak it myself. In fact, I think that was the problem with Jim Comey at the beginning of the last administration, but that's a different story. So you can read more of Bloomberg's bias that the president's cumulative pressure campaign has continued to blur the line between the central bank administration, potentially clouding its independence. And he adds another factor as Warsh looks to navigate the fallout from Trump's war in Iran, lingering inflation, and a hefty U.S. budget deficit. So it really is, they shade the article. And Bloomberg's the owner. It's not a corporate owner. He's the owner. You do what Bloomberg wants. But you should know that Bloomberg is, generally speaking, the articles and certainly the editorial page is very anti-Trump. Now, and this kills them. The Journal's report on the calls between Trump and Warsh said the president has short Warsh's views on a range of issues. It kills them that the Wall Street Journal got the story first. Now, Journal also reports that Scott Bessent's yen trade has unintended consequences of the markets. And as you'll recall, last week, the United States and Japan did a coordinated intervention to sell dollar yen, buy yen, sell dollars, very effective. Now, the way it's being financed is unusual because usually the Bank of Japan will do it. They may ask the Fed to execute on their behalf. That is not the same as joint intervention. This is joint intervention, first time in 11 years. It's a big deal, 11 or 15 years. It's a big deal. Now, the way it is being financed is unprecedented. Now, so far, they admit that the scale is small, but the Bessent wants the Fed to drop its $60 billion cap on the emergency facility being used to lend to Japan. Because he's pledged to whatever it takes to help. So it suggests that, if dollar yen backs up again, they will intervene again or pick a time to intervene strongly. Basically, what the U.S. is saying, I'm going to lend you dollars. You take these dollars, you sell it to buy yen. Right? Those dollars go into the system. So the U.S. is printing dollars so Japan can buy yen. Now, the Fed is, lending the money in return for temporary ownership of treasuries and repo agreements rather than outright buying the treasuries. But this it's like a bank lending money expands the balance sheet, which is what, that's not ideally what this central bank may not want. But the reason he's doing it is Bessent is trying to avoid the standard method of intervention, where Japan sells some of its stock of treasuries, putting upward pressure on yields. Now, basically, this is Bessent saying here, he's watching the U.S. Treasury market very closely, and as a corollary, there are some potential tail risks that he needs to manage. He doesn't need, when the back end of the Treasury market is selling off, oh my God, Japan is selling treasuries to protect the yen. Right? They don't want that. So he says, let me lend to you. You don't have to sell treasuries. In fact, if you don't sell treasuries, it would make me very happy. And I think the Japanese be like, let's keep the U.S. Treasury Secretary happy. It is a good point, but these amounts aren't big enough to really make a difference. I wonder, it will be interesting what Warsh would have to say to Bessent saying, okay, we can do this for you, or, let's not let it get out of hand. But it's a good point, but I don't think it's that important because of the amounts involved. Okay, so this headline really caught my attention, and these things sometimes might cause a little panic, so I drilled a little bit into it. From Bloomberg, top U.S. mortgage lender plunges most ever after pausing dividend. United Wholesale Mortgage fell by a record 49% on Thursday after the country's biggest mortgage lender announced a net loss of $450 million and suspended its dividends for the first time. If this gives you vibes about the great financial crisis, I don't blame you. This is why I looked into it. So, did some research into it. They also announced a $2 billion investment by Oaktree, and as well as a new investment vehicle owned by basically the controlling family. So these guys grew rapidly during the pandemic when lockdowns and low interest rates propelled a boom in the market. But in recent years, the firm has come under pressure as the housing market and demand new mortgages slow dramatically. Rates are too high. People aren't buying houses. People sure aren't refinancing. So, they were losing money, and then they tried to buy a big mortgage servicer, which services your mortgage and collects fees. It didn't work out because they wanted to pay for it in stock that was dropping, and the Two Harbors says, no, actually, we don't want it. So apparently, the United Mortgage has paid a 10-cent dividend every quarter since going public via a SPAC deal in 2021, even as shares slid to record lows. what's really interesting is the vast majority of those have accrued to the Ishbia family, the owning family. Through a holding vehicle, they received more than $6.2 billion in dividend payments through the first quarter of 2026. Over 5 years, they've gotten $6 billion. So it's a scary headline. You're worried about somebody else having the problems. I don't think so. I don't think there are other cockroaches. The family owns 90% of the equity. And you can see, just look here. Here's the chart, right? Straight down this whole year. And this drops like 50% right here. If you look at their cash flow statement, in the period ending, 25, their years, look at this. Net income of fiscal year 244 million. They paid themselves 716 million. Same thing, paying themselves more than they're making. 2022 was different. 2021 was different. Basically, the family paid themselves very, very handsomely via dividend because they own so much of the controlling stock. So are they going to go out of business? They are 8% of the mortgage market here right now. So I don't think they're going out of business. But do you really want to buy a company where the family's basically paying themselves very handsomely? It's kind of like a scratch-off lottery ticket. You can buy 10,000 shares here for a buck something, and if it goes back up to $2, you'll double your money. But it's seems a little risky. Again, it's a scratch-off lottery ticket. I took a look at Rocket, which is one of their competitors. They're 6.5% of the mortgages, but they have a big service business, and they are investment grade, around investment grade. United is well below investment grade. So if you think that there's going to be some recovery in the mortgage markets, I don't think we're going to get it that soon. I just don't see rates coming down until next year, so, in a significant way. Rocket is a much better investment. Now, if you really want a lottery ticket, maybe you can try UWMC, but that's purely like money that you're willing to toss around in the casino. Let's take a look at Brent. No real news, but it's bouncing today. It's up about 3%. Looks like 78.80 is support. The question is not where's the beef, but we're talking about the Middle East, so I'm saying where's the lamb? This looks like the bottom for now until we really get some significant news. Okay, some earnings. SanDisk came out and Western Digital came out yesterday. SanDisk beat on earnings very nicely. Revenue, decent beat, not amazing. The stock's was down a lot earlier. It's recovered. It's still down 4% because it beat, but didn't beat by enough, and the guidance wasn't enough. Western Digital, excuse me. Western Digital just barely beat revenues, and earnings weren't great, so they're down 11%. Also off the lows, but market's very, very demanding. They really want to see not just beats, but amazing beats and amazing guidance. Today, SoftBank did pretty well, down 2.3% in Japan, and then ConocoPhillips down a little bit, even though they did well. We have Airbnb and Rheinmetall. Rheinmetall, they do actually European defense, so I was interested in it, but I didn't see any results. Okay, where are we today? Stocks are down a little bit. SK's down 5% in New York after a 10% drop in Korea. The yields are, have erased yesterday's gains. Metals and crypto are both consolidating. Gold is unchanged. Silver's down a little bit. At this point, I think they're waiting for the payrolls tomorrow. Okay, let's look at the Korean markets. You know what? Still unsettled, down 4.5%. Looks like we found a bottom here. Might be too soon to say. Would love to see it back above the 100-day moving average here, but unsettled. SK down 10%. Is there still too many leveraged ETFs? The onshore price here are all red candles. What that means is, even though it might be up for the day compared to the previous day, it's during the Korea trading day, it's just all selling, which is really not a good sign. I think, is it people betting on leveraged ETFs it's going to go lower? Maybe. But same here. Let's clear the 100-day moving average and see if we can swing higher. But this is certainly not helping the U.S. markets, although as of the last week, we didn't need it. NASDAQ 100 consolidating. S&P 500, after that huge 4-day ride, consolidating. You can see here, really not much going on. The only thing up today is energy. Everything, technology is up a little bit. Everything else is down. So gold, off today's highs, but easily holding this break of the 50-day moving average that we haven't seen since here. And apparently, according to Bloomberg data and the Kobesi letter, China's gold ETFs have 14 straight days of inflows. Longest streak of additions since March. You can see how much they came in here. And before this rebound, China's gold-backed ETFs recorded outflows in 38 out of 44 trading sessions. So the Chinese are interested again. Will they continue to be interested? Because they can certainly impact this market, especially if you're getting drives higher overnight every night. Silver, a little less confident here, not quite above the 100-day moving average, but it is coming down. So, if gold can hold up, I think silver goes back higher. So today we had a bunch of data about jobs. Challenger job cuts, a big drop, and jobless claims at 200,000. That is really at the low end of things. This number continues to look healthy. Unit labor costs are below consensus. Job and productivity is higher. So those are all good things. Now, tomorrow we have non-farm payrolls. Consensus are at 83,000. They're looking for a tick higher in the unemployment rate. I'm guessing it's going to be a little soft. I think 55,000, maybe revisions lower, and I think unemployment actually may stay at 4.2%. Let's see how this goes. This will matter very much. If we get a number above 100, I think the bond market and the stock market will both sell off. I don't think you want a lot of weakness either, but I think something like 50, 55K, maybe 40K market will like it. They'll worry less about rate hikes in the short end. So thanks for coming in today. I will see you tomorrow for payrolls.